What would you do if the stock market suddenly turned against you? After 2 years of strong double-digit gains, many investors in 2025 are feeling invincible. But here's the thing, confidence can quickly turn into overconfidence, creating risks that could shake even the strongest portfolios. In this video, we'll explore why overconfidence can be the biggest threat for your portfolio in 2025 and how you can protect yourself. So, let's dive in! Think about today's US market. Stocks have been climbing for 2 years in a row. The S&P 500 has been up over 20% in 2023 and 2024. Everyone, including me, feels like a genius right now. But here's the big question. Is your portfolio growing because of your skill? Or are you lucky riding a wave that could crash? Optimism is everywhere right now. AI stocks, high-tech companies, and the top 7 names in the S&P 500 dominate the market. But history shows us that when trends go too far, they either correct themselves or get corrected. When investors believe that there is no price too high, that's when the risk is highest. Howard Marks, one of the greatest investors in the world, said it best. When you can't imagine any flaws in the argument for buying, you stop asking whether the price is worth it. This mindset inflates bubbles, leading most investors to buy stocks at prices that don't offer a strong margin of safety. And the thing about bubbles, they pop. Remember, trees don't grow to the sky, markets don't rise forever. That's why every great investor should also be a great risk controller. Risk control is like insurance for your portfolio. It's about protecting yourself from losses, even in good times. The tricky part is that in good years, risk control feels unnecessary and it doesn't get you applause or headlines. As Howard Marks puts it, risk control is invisible in good times, but essential since good times can so easily turn into bad times. Superior investors don't just chase returns, they manage risk. And that's what separates those who survive downturns from those who don't. Your goal as an investor is to find the best opportunities with the best balance between potential return and risk. It's about buying wonderful companies for less than they are worth. You want investments with a big upside and limited downside, a high probability of gains and a low probability of losses. The danger with overconfidence is that it makes us focus on only being aggressive while ignoring caution. Warren Buffett, the best investor in the world, said it best. The less prudence with which others conduct their affairs, the greater the prudence with which we should conduct our own affairs. If an investment offers big gains but also big risks, I'll usually pass because I don't want to bet my portfolio on something that could wipe me out. Think about homes in California. They might look perfectly stable, but until an earthquake hits, you don't know if they have hidden construction flaws. Investing is no different. A market crash will reveal if your portfolio is built on solid ground or shaky foundations. As Buffett says, a rising tide lifts all boats. Only when the tide goes out do you discover who's been swimming naked. In a rising market, it's easy to look smart, but when the market corrects, the truth comes out. Are you building your portfolio on careful analysis and risk management? Or is overconfidence running the show? Because in 2025, the tide could go out and you want to make sure that you are not the one swimming naked. If you like this video, check out in the description a recent video I made on the hidden risk of investing in the S&P 500 right now. And let me know in the comments, how are you managing risk in your portfolio today? This is it for today, guys. If you got value from this video, feel free to drop a like. And if you want to receive more contents like this, feel free to subscribe. Thank you all and peace out.